So that is a wrap for the questions. Now let's just look at our market context heading into tomorrow and the next couple of days here. So if we look at the daily chart, bigger picture, it's a little bit messy over here, but you can see that we're essentially at the top of the current balance, which also marks the all-time high, right? So we are at an important inflection point where there are two possibilities. Either we get a successful breakout, and if we do get a successful breakout, that is when we will get time frame alignment, right? So if we get a successful breakout to a fresh all-time high, that's what would trigger multiple time frame alignment. And if that happens, then as long as we're not seeing the other markets lagging behind, as long as we have momentum supporting the upside move, then there's no hard resistance, right? We're dealing with something that's at all-time highs, and it would then be making fresh all-time highs. A pattern that is pretty typical is you can have, kind of a big balance, right? Which is essentially, this whole thing, right? Can be viewed as one balance area. And then quite often what happens is you will get a smaller balance at the edge of the bigger balance. I posted about this on Twitter for anyone who follows me there. And then when you break out, finally, right? And if you zoom in more, by the way, there's like another smaller balance at the edge of even this one, right? Like this. So you can see there's like a balance area within a balance area within a balance area, right? So this is very, very typical. And then when you get the breakout, you're breaking from this balance, you're breaking from this balance, and you're breaking from this one simultaneously. Those are the moves that generally end up having some decent range potential and follow through. So we know that we're at, this larger time frame inflection point, and now if we can get a breakout above this area, then there would be potential to kind of go directional, right? So then, it might look something along the lines of this, right? So that's one possibility. The other option, or the other thing that could happen, is that, we try to break out and we just can't, right? So the main thing to recognize here is that we're at an important decision point, inflection point, whatever you want to call it, right? And we're either now going to put in a successful breakout, or if we can't put in a successful breakout, then we can either continue balancing in the recent range, right? So if we get a false breakout, then we can continue balancing in the recent range, or if it's a false breakout in conjunction with the other markets breaking down, then it can lead to a bigger move going the other way, right? So then we can have a false breakout followed by kind of a bigger move, going down, and then, who knows where that's going to stop, right? I mean, it might go down to that 92 to 96 area. It might go down to, this swing low over here. And if things really get bearish with the other markets, then it could even go down to, the balance area low, right? But these are the two possibilities, or two or three possibilities, that could take shape over here. And the main thing to understand is that we are at this inflection point. The bigger picture bias is bullish. So if we get a breakout and it's happening on, some sustained upside momentum, and the other markets start heading higher as well, then because it's going to have time frame alignment, it can really have some follow through. Whereas if it's a failed breakout, that's a different situation, because as we come down, there are pockets of support that have built up. So then it doesn't necessarily have to be like, kind of a straight line move down, right? It might be you come down, you respond to a zone, and then maybe you go to the next zone, then maybe you respond there, and then maybe you go to the next one, right? So then it could be that way. So that's the context right now. You know, we're at this larger time frame resistance, we're at this larger time frame inflection point, but anytime you're at larger time frame resistance, you know, the first couple of times it can hold, but then when it breaks, that also has a larger implication, and it can lead to a bigger move. So right now, you know, we're kind of at the spot where something's got to give. You know, either the buyers step in and we get a proper breakout, and we know that the S&P has been leading the market higher, so it is the stronger index. So if we get that breakout and the other markets, you know, don't have to necessarily break out, they just have to start heading higher, right? Getting towards their own breakout areas. If that happens, you know, then the S&P is moving to fresh all-time highs and there's no resistance. So then we don't know where it's going to stop. And it could even end up being a multi-day move, right? So, you know, we're day traders, we'll take it day by day, but then that is possible. If it fails, then unless there's some really bad stuff happening in the Russell and NASDAQ, it can just continue bouncing in the recent range, you know, pull back to support, bounce back up, pull back, bounce back up, because it is the strongest market, right? And when the strongest market fails, usually it doesn't just completely crash back down. Quite often, it'll still take a little bit more time to make its way lower, but clearly there's a bias change that can happen. And we just have to be on the lookout for either of these scenarios. By default, we can give edge to longs up here, given the fact that, you know, despite today's intraday weakness, the sellers didn't really show up in any meaningful way, and the buyers continued to defend, and they continued buying in the face of intraday weakness. You know, that's a bullish signal. So by default, we're going to give edge to buyers, and that's why if we get the breakout, you know, that would be the path of least resistance in a way, based on what we know so far. But if it's a false breakout, then you need to be flexible enough to adjust. You know, you don't want to get locked into a singular view, and that's why you'll note that, you know, if you're on the EminiPlayer site, there could be one scenario that's higher probability, but I will always cover the lower probability scenario too, because I don't want us to get blindsided. You know, I don't want us to get locked into just one expectation and that's it, right? Where when the market proves otherwise or shows us clear signs that it's not working out, that no, we just stay locked into one view and we end up getting run over. You know, there needs to be that flexibility where if things are not working out, if that hypothesis is not working out, then you need to be willing to adjust. And, you know, quite often the biggest moves in terms of absolute points happen when the low probability scenario takes place, because it catches people off guard, right? No one's prepared for the low odds scenario. Everyone's prepared for the high odds, or kind of the obvious one. Now, more often than not, the obvious one will play out, right? And that's why people continue to focus on the obvious one or the high odds one. But then sometimes the low odds plays out. And when the low odds plays out, if you're prepared for it, then not only do you not get run over, you can really take advantage of it because no one else is prepared for that. And people usually get run over on those types of days. But if you've at least thought about the other side too, then maybe you can recognize the changes in the market before the person who's never even given it a thought. And it's not even a possibility in their mind. And quite often that leads to a situation where traders get trapped and then the market ends up making a bigger move the other way. So that's kind of the way you want to think about this.